Hello, everyone, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, January 10th, and wow, are we getting some price action this morning. Traditional equities really holding us back. I think that's evident from, over the weekend where we tried to show some signs of strength, but this morning that's all come crashing down as traditional equities continue to sell off. Big tech being hit hard here. Bitcoin is included in that category. We'll talk about that as well as some, big milestones coming up this week that could influence price, as well as a few headlines that we'd like to cover today as well. Before we dive into all that, CJ, how are you doing today, my friend?
Doing well, Monty. Very interesting conditions in the market this morning, basically with tech getting hammered, like you said. Looked like Bitcoin actually wanted to kind of hang in there this weekend, or at least sustain the oversold levels. And it just, having tech open up and have a morning like this, nobody's coming to necessarily save Bitcoin in the way that the Federal Reserve will sometimes prop up traditional markets. But why don't we get into some screen sharing and go over some charts to start?
Let's do it.
So, going to the S&P and just traditional markets to start with, we have a lot of technicians, highly respected in the space and ones that we talk to on a regular basis who really get quite nervous every time we test these critical levels. And so far, the Fed has been able to kind of calm the market and ease. And, we have responded basically by rallying to new all-time highs every time we've tested these critical levels. However, one day, these technicians are going to be right when it comes to the breakdown of some of these critical levels. So, I think we're on the brink right there. And if we are to fall harder in the S&P 500 in traditional markets, nobody's really coming to save crypto. Like I said, like regulators and the government don't care about it. So, that's something to be said in terms of weakness. Now, if we look at Bitcoin and some of the critical levels, we actually did test down below, this critical support level that we've actually held ever since the beginning of the bull market, really here hitting it at 40K. So that's going to be a critical level. From a purely technical standpoint, you would be looking for places to accumulate at this level. If you were following just technical analysis theory, because we do have wide divergences from this moving average. We do have, a hammer candle at the bottom of a downtrend. We probably will get a TD sequential buy 9 tomorrow that could, at least bode for some relief, at least in the short term. But if big tech continues to sell off and get hammered like that, Bitcoin likely will as well. And, you can see even more carnage in some of the alts right now. Really, the only thing that's been performing well has been Near. That leverage 3x contract on KuCoin for Near has been performing quite well today. A lot of traders potentially in that one. But yeah, overall market, it's just it's quite bloody today. It could be pricing in, some of the economic reports that we're going to get on Wednesday. So could be interesting. But what do you think?
Yeah, definitely. Yeah, a lot to watch this week, CJ. Like you said, we got consumer price data coming out this week, as well as inflation data. Typically we do tend to experience some sell pressure leading into those events. But I want to just pull up the Bitcoin chart as well. I think you made some really nice points there. And I just want to quickly touch on those. But yeah, this is the consumer price index data. We have this coming out on the 12th here at 8:30 a.m. So be on the watch out for that. Could have an influence on price, but more than likely, it seems like it's already being priced in. But CJ, you mentioned that critical 40K level. We did dip below it in the interim, and we are right at that level now. And in my opinion, this is arguably the most critical level for Bitcoin. And if we go back, like you said, all the way back here, almost exactly a year ago today, this is pretty much 1 year ago today, January 10th, 2021. This was an inflection point for Bitcoin. Up until this point here, we had institutions accumulating. I've talked about this extensively back during this time, but much of the price action that we saw here was kicked off by institutional adoption. We had MicroStrategy putting Bitcoin on their balance sheet, and and just many other, on-ramps for institutional exposure starting to be established during this period of time. So we had institutional accumulation, and as a result, price went up and really didn't look back during the month of December. We hit some resistance at 40K, where we saw some of those institutions start to take profit, which is natural after a move like that. But then we had, the retail trade really start to step in. And that's evident from the extreme volatility that we had during these market tops. One thing that we talked about extensively during this period of time was how, there were a high number of transactions, high number of low dollar value transactions, implying that retail was a big part of this price action. And also we had leverage flushes during this time, also another indication now, retail was driving this market. So I see this level here, 40K, as sort of the midline between institutional participation and retail participation. Retail seems to have bought above the 40K midline and thus have had to capitulate over the last couple of months here, and this sell pressure has resulted in kind of a retest of this level. But the long-term holders, these institutions and the whales, they have not shown any signs of distribution. So really, to me, I just need to see how much sell pressure we have left. We've talked about the role that short-term holders have played in this market. All the people that bought this top, still have the possibility of capitulating going forward. So, if we see a continuation of that negative sell pressure in big tech and in traditional equities, then we could perhaps dip below this level in the interim. But ultimately, I do kind of expect us to start to bounce around this level, or at least start to consolidate around this level, given the market dynamics around that 40K level. We just don't have all that much left in terms of short-term capitulation. And ultimately, I don't expect any long-term holders or institutions to be selling below this 40K level. And one last thing I want to point out here is something that many of you may have already noticed if you're technical analysts just by looking at this chart, but that's this potential death cross we have coming here within the next couple of days. This is green line is the 50 period moving average. This gray line is a 200 period moving average. We have, what is known as a death cross, where the 50-day crosses over the 200 moving day, typically a sign for negative price action. The most recent occurrence of this was back here in June. And I think what's worth noting here is that, this actually kind of coincided with the market bottom rather than, leading to further negative price action. We had the crossover here on June 19th, and then ultimately we kind of bottomed here on June 22nd. So we have this impending cross here, definitely worth noting from a technical analysis perspective. But, when we look back here, what we saw was that this actually kind of coincided with a market bottom rather than a further sell-off. So lots to watch. One last thing I will say is that, not only are traditional equities like the Qs worth watching this week, but also the TNX. This has been just absolutely on a tear in the last week here. This level 1.8, a lot of eyes are on this level here. Lots of people have marked this as a critical level, and for good reason. This is kind of the marked by the lower high we put in here all the way back in April. And, now we're retesting this level again. So it's really the perfect storm. We have a few different metrics to watch. Will the TNX break above 180 and continue to climb? Will it bounce down? All of these things will likely affect the price of Bitcoin. So I think that this could be a really influential week for price action. So lots to watch.
Yeah, TNX is on a sequential sell 9, I believe. So interesting to see if that one tops or at least gets a little bit of a pullback. That would definitely help the bull case at least. But I think it's important to have a venue where you can play both the long and short side of the market in days like these, because just based on recent price action, it's looks like we could be in for some chop in either direction. But another statistic that I do want to bring up that we discussed a little bit last night in the community room has to do with Bitcoin and the overall percent of entities in profit. And so as of now, when looking at this Glassnode data, the last time we were this low in terms of net entities in profit, Bitcoin was a price of $7,000, in about May of 2020. So that's quite interesting. I think what that's a reflection of is all of the holders who really bought the top, expecting that 100K breakout, are just kind of sitting. You can look at how sharp the drop off is when it comes to the percent in profit relative to just the price. And I think that's reflective of a lot of top buying, expecting that 100K by end of year type trade. So, the sellers are getting close to a point of exhaustion. That being said, if traditional markets continue to fall, it's not going to matter. So,
Yeah. One last thing I want to just quickly share, CJ. I saw Bob in the chat asking about some liquidation data, and there are some interesting metrics at play right now. One thing I wanted to bring to everyone's attention that I've referenced a few times on this show is the futures open interest leverage ratio, basically the amount of leverage relative to the current market cap. And as you can see here, we are reaching levels that we haven't seen since our major liquidation event at the beginning of December. And ultimately, we're approaching these levels that typically precede a massive liquidation event. And that's a bit surprising given our current price action. But when I was talking about the death cross, I made that comparison to price action in June. We could be setting up for something similar in June. There is a lot of fear. There was a lot of fear back here in June as well. People got short. We saw this spike in open interest. That was people getting short, as evident from the funding rate as well. We could see that during this time of market consolidation, and during this time of overall uncertainty, we had shorts stacking up. Shorts were paying a premium to the longs at this point because they were very favorable. Lots of people were very down on Bitcoin, but ultimately that led to a squeeze. We saw that leverage get flushed out here at the end of July, and ultimately that was the catalyst that propelled us out of this bearish to neutral consolidation during the summer. So now that Bitcoin is approaching similar, market dynamics in the sense that we have this bearish cross here, we have, a little bit of a negative funding rate. It's not, necessarily as positive as it's been over the past couple of months here. It's starting to flip a little bit negative, and also we have this open interest leverage ratio, starting to reach levels that we haven't seen in quite a while. So all of that tells me that we could potentially see a squeeze here, but really, I think in order for a squeeze to happen, first it would need to be, more like this sort of price action where we have a little bit of an interim rally that gets rejected, and people really, really get negative on Bitcoin. They expect further negative price action that leads them to getting short, and ultimately that propelled us out of the bear market. Right now, it still seems like much of the price action we're seeing here is contingent on traditional equities, like we've pointed out. But ultimately, I still think that catalyst of a short squeeze and leverage being flushed out of the market could be something that propels us out of this bearish neutral consolidation. So we'll be keeping an eye on all those metrics, but just wanted to quickly bring those on your radar here.
Well, that's what did it last time, right? When we touched down to about 29K and that had that short squeeze to 42, and then it was like, all right, well, jukebox is back on. But anyways, thank you guys so much for watching today. I hope you have a wonderful day in the world wherever you are, and please hit that like button and subscribe, as it does help us very much. Also, if you'd like to learn about our personal trade ideas, and we also have a trading education curriculum with a pro charting service and community chat at the link below that you can see in the description. So we really appreciate that, guys, and hope you have a wonderful day here. Take care.
Take care, everyone.